Mike here, head trader at True Trading Group, October 29th. Another red day for me. It's 2 in a row. My first back-to-back red days of the month. First back-to-back red days in a while. So hopefully I don't turn this into a losing streak. So tomorrow I will be looking to kind of, get myself back on track and be a little bit more conservative. I got trapped again in the SPY. We gapped down today on the SPY. I went after some put options. I got run over again. The last 5 times that we have made new all-time highs, we've been red the following day. That was kind of what, and we gapped down today. And what I was doing today, guys, was trying to look at this previous support level in the SPY yesterday. Okay, I was looking for that to become an area of resistance. We gapped below it today. I bought put options right there. Okay, on the SPY, looking for us to break below yesterday's low, which also lines up dead even with today's low, to take us into the gap that we made yesterday. I thought we were going to try to get down and test this area right here. Okay, so I was trying to get a little fade in the SPY. Not a big sell-off. I wasn't expecting a huge sell-off, but I was expecting just like a profit-taking fade. And that's what we have seen the last several times that we've made all-time highs. If you guys go to the daily chart, okay, let's zoom this back, and you can see right here, new all-time high, red day the following day. Right here, all-time high, red day the following day. Right here, all-time high, red day the following day. Right here, all-time high, red day the following day. Right here, all-time high, red day the following day. The last 5 times that we've made all-time highs, the next day was red. Okay, so, I thought after yesterday, I was expecting today just a little pullback, just a little candle to the downside, nothing major. And I thought the gap down was a perfect chance to do it. And I went ahead and I bought some put options down there. I take you guys to my trade announcements. That's the second one, actually. I broke my trade announcements up into 2 today. We had the other moderators in chat were actually pretty active today, so I had to break them up. So here's my first trade of the day. I bought the 300 strike puts, tomorrow expiration at 97 cents. Okay, I bought them right there. And then you guys can see once we broke through this previous level, this was the level I was looking to be support. Once we broke through it, I had to just bail on that position. I exited that trade right here. You can see at 76 cents. So right away, started the day off red. Not what I was looking for. Oh, I'm sorry here, guys. I said 300. It's 303. So I put 300 in my announcement, but it was actually the 303 strikes. See here, I have the correction, 303. So this was just a typo with the 300. So I bought the 303 strikes at 97 cents, and then I sold out of the 303 strikes at 76 cents. All right, so took a loss on that first trade of the day. Then we had I took a loss on Tesla today, and then I actually opened up a swing trade back in the SPY, specifically for the Fed, and I'm going to talk to you about this trade idea that I've got going on here for the Fed. I'm going to explain to you why I'm doing what I'm doing and what the thought process is behind it. It's a very high risk, high reward trade. If I'm wrong, I'm losing probably 60%. If I'm right, I'm making probably 200, 250%. Okay, so I'll get into that trade with you, but again, it's high risk, high reward, so I don't have huge position size. Okay, I've lowered my size. But first, before I get into that, let's get to the Tesla trade today. This was another one, just took another loss on it, guys. We broke down below, okay, this previous low, okay, and then on this bounce back, we had the trade line, we had VWAP sitting here. I went ahead and I actually got short, okay, in front of VWAP right there on Tesla. I'll take you guys to my trade announcements. Here you can see at 10:23 a.m., short Tesla, 318.23. And I ended up getting flat at 320.16. So my thought process here was that we were going to get resistance here at VWAP in the trade line, and then we were going to roll back down towards lows, and I'd be looking to take some profit off in front of the low of the day, then look for a new low of the day break. But we ended up piercing through VWAP and extending higher, and I covered my position right there at 320.16. So another Oh, no. There it is. So covered Tesla 320.16. All right. So those are my two trades today, guys, and another red day. It's a similar day to what I had yesterday, which was, it was a red day yesterday, but just sticking to my stop losses, managing my risk, not getting blown up or not getting crushed on any of these trades. But nonetheless, two back-to-back red days today. First time this month, first time in a few months, actually. But let's just hope that this doesn't turn into a losing streak, and I'll look to come back tomorrow and hit it. Tomorrow's Fed day. All right, now let's talk about the swing trade. Tomorrow's Fed day. What's the Fed going to do? The markets are pricing in a rate cut. Okay, a 25 basis point cut is priced into the market. It has, partly the reason why we've made new all-time highs, partly the reason why we were strong on Friday. U.S.-China trade talks, positivity with that, better than expected earnings. All that has contributed to all-time highs. Now, here's my thought process with this trade. Today, right before the bell, I bought the 303, take it back to my trade announcements, right before the bell as a swing trade. I bought the 303 strike tomorrow expiration puts at 78 cents. So the same contracts that I lost on in the morning, I bought them back before the close. What am I thinking here? My thought process is the street is expecting a 25 basis point cut. However, economic data has not been that bad. Earnings have not been that bad. Actually, better than expected. Recessionary fears are fading. The yield curve is steepening. The worries of recession are starting to fade, guys. Okay, they're starting to fade. And I think that there's actually a much greater chance that the Fed does not cut tomorrow than the street is actually expecting. I'm not saying that the chances are that they don't cut. Okay, chances are that they probably do. I'm just saying that the probability of them not, I think, is higher than what the street is pricing it. If the Fed does not cut, I think we see a significant pullback in the market. I think the SPY can get down to 299. If that's true, this will be a grand slam trade. I'll be selling these contracts. I bought them at 78 cents. I'll be selling them at $4. Okay, if that happens. Not saying that's the likely scenario, but I think that there's a greater chance of it happening than people expect. It's also a great opportunity for the Fed to separate themselves from Trump, who has been pushing them to cut, and they have cut. And a lot of people were trying to see, well, are they just cutting into Trump's trade war and enabling him to continue on with the trade war with them cutting? I think that economic data would support them standing still at this point in the game. So we got to see what happens. The other thing that I think is if they do cut, but Powell signals that this is our last cut, I also think the market pulls in. Not as aggressively as if we get no cut at all, but I think we at least pull back. So two things that I think could happen that would help, that would make me win on this trade. No cut at all turns into a grand slam. I think I'm selling these contracts at $4. A cut, but they signal that this is our last cut. I think we get a slight pullback in the market. Maybe I sell these contracts at $1.50 to $2. Still a really good trade, right? If we get a cut and no signal that this is the final one, I'll be losing, 60, 65%, maybe even more on this trade if that does not happen. Okay. If that is what happens, if we get a cut and they're signaling that this is not the last one, that's going to hurt me as well. The other outside fundamental factor that's going to affect this trade is GDP numbers tomorrow morning pre-market. Okay, a much better than expected GDP number is going to gap us up tomorrow. That will really hurt my trade. But what I'm looking for is tomorrow GDP numbers to not surprise and actually gap us below this 303 area. Okay, this area has been such strong support over the last 2 days. Okay, You guys see this support level right here. Okay, here's your support level. What I'm looking for tomorrow is after the GDP numbers come out for us to gap down below this level. Okay, then once the market opens, I want to see this level act as resistance. Okay, act as resistance. We can't get back above it. And then we pull back in down towards 302.50 or so, 302.25. Maybe we get down to retest these previous little pivot highs and we start to get into this gap. If that's the case, that's going to give me a great opportunity to take some profits off on this trade. Ideally, perfect scenario is we get below 303 tomorrow. We push lower off the bell. I can lock in some profits on this trade, reduce my risk going into the Fed announcement, just in case they do cut and signal that, you know, this is not the last one and the market shoots back up to 304, I'm not going to get as hurt. I want to reduce my risk if I can going into the Fed announcement. Okay, but I can't get completely flat the trade before the Fed announcement because this entire trade is based on what the Fed may or may not do. Okay, so again, guys, this is a very high risk, but also very high reward trade. You've got to understand that going into it. And accept, you know, if you say to yourselves, oh man, I'm only okay with losing $500 on a trade, then you better not buy more than $1,000 of this trade if you're going to go after it with me. Okay, so you got to figure out a dollar amount that you're comfortable risking and understand that you know 50 to 60% of that's going to be on the table, because if we're wrong, you're going to be looking at that type of a loss, maybe even a little bit more. But if we're right, you could be looking at a 250, 300% gain. So it all depends on what the Fed does. GDP numbers will affect this trade tomorrow, hopefully in our favor. And if we get below 303, then some technicals could possibly work in our favor with that 303 resistance, and then maybe try to gravitate and drift down into the gap up from yesterday. All right, that's what we're looking for. Okay, so that's it, guys. We'll see what happens tomorrow, and I'm going to look to get myself back on track. October's been a big month. We had a lot of home run trades. You know, I'm going to slow things down a little bit. I don't want to give back too much of my profits that I worked so hard for all month. It was a big month. And I want to finish the month strong, you know, so back-to-back red days going into the end of the month is not how I envisioned this week going. So tomorrow I'm going to look to just get myself back on track and lock a green day. Okay. Fed day tomorrow, guys. Let's see what happens. I'll see you guys in chat. Take care.